Hello and welcome to my channel. I'm your host, Dwayne Kavanaugh, and I'm a licensed mortgage agent in Ontario. And today we have a special guest. We have
You got
Deanna
it.
Lepp here from HomeEquity Bank, known as the CHIP reverse mortgage. And today we're going to be demystifying reverse mortgages and just have a casual conversation. Deanna has agreed to come on and talk to us about some of the questions that a lot of people have regarding reverse mortgages. So over to you, Deanna. Maybe you can introduce yourself.
Awesome. Thank you so much for having me, Dwayne. My name is Deanna Lip, and I'm the Business Development Manager with Home Equity Bank, national provider of the CHIP Reverse Mortgage. And I support mortgage brokers in the Golden Horseshoe. So awesome. Thank you for allowing me to be here today.
Oh, it's my pleasure, and thanks for again for coming. So why don't we jump right in? I've got a number of questions that a lot of the folks that I talk with ask, and I'm happy to have you here to answer these questions. And we'll start off with a really simple one. And that is, what is a reverse mortgage, and how does it work?
Perfect. So a reverse mortgage is a mortgage registered against one's principal residence. But what it allows you to do is to access some of the equity in your home. And where it differs from a traditional mortgage is there's no burden of making a monthly repayment. So you can choose not to make monthly payments.
And that kind of moves us over to the next question. Then, how is it different from a traditional mortgage?
Perfect. So great segue. So again, not having the burden of a monthly payment. How it differs from a traditional mortgage is, when we buy our first home or our second home, we focus on paying our mortgage down. That's our goal. So we're making principal and interest payments in an effort to pay down the mortgage as quick as possible. With a reverse mortgage, it's the opposite. It's the reverse. So we're later on in life. We've owned one or two homes. Now we're either looking to go or move into retirement into the later stage of our life, or we're in retirement and we may still have a mortgage. So, um, you know, what comes with retirement is usually not necessarily the cash flow that one had when they were working or employed. So basically, it allows you to have the choice of making payments or not, but they're not required.
Perfect. And then over to the eligibility requirement.
So it's quite simple. In order to the eligibility or in order to qualify, you have to be at least 55 or better. So there is an age restriction. And yeah, so 55 or better. You have to own your own home and it has to be your principal residence.
And does the amount that I would qualify for, is age impacted, or how do you decide how much I can get?
Absolutely. It's a great question. And we receive a lot of feedback saying, oh, but I thought we could go up to 55% or we can receive a maximum of 55%. So how we determine how much we can lend is based on the following criteria. It's based on age, obviously, value of property. It's based on the property location, and in some instances, the property type, so condo versus single family dwelling or freehold townhome. So, why age is very important, I think, is we want to make sure that as we age, there's still going to be equity left in the home. So simple fact is the older you are, the more we lend. And I think it's for obvious reasons.
Yeah, and that
So
makes sense
someone,
too.
yeah, for someone who's maybe in their early 60s, we want to make sure we're living till 100 years old. We're living healthier, we're living longer. So we want to make sure that there is equity left over. Because it is someone's biggest asset that they'll ever probably have in their lifetime. So we want to make sure that there's an option of still having equity left over to right size or to go into a retirement facility, or uh, leave an inheritance or a legacy.
Yeah, how is equity determined, and how does it relate to reverse mortgages? Maybe you can talk a little bit on that subject as well.
Right. So actually, I think I probably combined those two questions that
Okay.
you asked. But um, yeah, so basically, again, age is very, very important. So um, for obvious reasons, once again, we want to make sure that we're not eroding all the equity. We want to make sure that there's equity left over. So that's why age is, in particular, is a very important component to determine how much we can extend and lend at that time. Now, it doesn't mean that as you get older, and even in today's market, we know that there's a little bit of uncertainty, and we've seen the ebbs and flows. But even taking a very conservative appreciation amount, and as we get older, we may be able to. There may be an opportunity to refinance and pull out more equity as we age.
That kind of brings me to how I can receive the fund.
Absolutely. So there's really two options. We have four products, but two options to receive the funds. One is in a lump sum. So this is a great opportunity for those who may still have a mortgage on their property. Um, we do have to be, being a Schedule One bank, we do have to be in first position. So we would pay out any registered encumbrances. So mortgages with other FIs and or registered lines of credit. And then we have another product that is gaining popularity, and it's Income Advantage program. So what that allows is for a small lump sum, minimum 20,000. So let's say it's someone that does have a property that's free and clear, or even if they have a $30,000 mortgage, they want to pay off that $30,000 mortgage. What we would do is pay that out, and they could receive monthly or quarterly installments over time, until they have depleted what they qualify for. Again, doesn't mean they can't refinance down the road, but allows for a monthly supplement. So this is a great opportunity in situations where OAS, CPP just aren't cutting it anymore. Look at the cost of living.
Hmm.
So if someone could have an additional $1,000 or $1,500 a month, it would really improve their cash flow and lifestyle and allow them to maintain and stay in their home. So that's a combination of a lump sum and a monthly or quarterly payout. So
Yeah,
those are the two options.
that's funny. I was talking with a potential client a couple weeks ago, and all they wanted was an extra $1,000 a month to golf. That was it, just golf.
Yeah.
So the next couple questions are kind of combined. It's because one of them is what are the advantages, what are the
Hmm.
disadvantages, and I just like to keep it simple: pros and cons.
Perfect. So the pros, again, how we sort of discussed so far, is really it's an ability to unlock some of that equity. And when I say some, we're very conservative on what we lend, and that's for a reason, as we discussed previously. Um, so unlocking some of the equity now, using the funds, um, again, to maintain or enhance one's lifestyle. One of the things that we're seeing also is, leaving a living legacy. So we all talk about having a will and passing on our wealth to our family or children when we pass away. But that mindset shifting, as a parent or a grandparent, maybe we'd like to see our children or grandchildren enjoy, some of the fruits of our labor now versus when we're passed away and we can't see them enjoy it. So those are really some of the pros. And when we talk about cons, I wouldn't say there's really any cons versus some misconceptions. Um, so there are misconceptions out there, and that's why it's important for brokers such as yourself, Dwayne, is to sort of dispel those sort of myths. But again, there'll be no equity in the home. HomeEquity Bank is going to, own your home. We go on title to the property. When the person no longer lives in the home or passes away, we take over ownership or title of the property. And there's nothing farther from the truth. It's a typical mortgage, no different if it were going to be a Scotiabank mortgage or Bank of Montreal mortgage. Um, Borrowers maintain full ownership of their home. If someone passes away, again, no different. a discharge statement is ordered, the balance and any accrued interest is paid back to our bank, and the residual funds are go to however it's determined in a will for someone's estate. We don't get involved in that. So I think when you talk about cons, again, I'm kind of coupling it with um, sort of misconceptions. And again, when we look at a reverse mortgage, this is why we have a tool called a financial illustration. It's so, so powerful. So again, there's a misconception that there's going to be no equity and it erodes quickly. We need to remember to add in appreciation. And I think I alluded to that previously, is that we really have to remember that, yes, although interest may be accruing, um, we have to allow for that appreciation to offset some of that accrued interest. So when I think of a con, I would think of, okay, so my husband, we pass away, we have a reverse mortgage, maybe our children end up with $500,000 worth of equity versus 750. Is that a bad thing? We tell our kids all the time, it's a
Right.
gift, it's not a right. So whatever we leave behind is a legacy. So, and when family is involved, most children in particular, they really want to see their parent or parents thrive and enjoy the rest of their life. And, this is an opportunity through a reverse mortgage, again, to allow them to do so. So I don't know if that answers your question, but yeah, I think it's more myths or misconceptions than cons.
So that was a great answer there. I think I'd like to unpack a little bit on how the interest accrual works. Maybe you can
Hmm.
walk us through that, if you could.
Sure. So it's pretty simple, the same as any other traditional Schedule One bank. So it's semi-annually, it's calculated. And again, the financial illustration is a very powerful tool, showing year by year, line by line, how the interest is accrued. Is it accrued interest on accrued interest? Yes. If you're not making any interest payments in part or in whole, absolutely. But again, once you factor in the um, appreciation, you'd be really surprised on how much equity is left in a property over 5 or 10 years.
And what happens if, let's say, someone outlives the term of the reverse mortgage? What happens in
So
that?
he, so here's the beauty. First of all, I just did a reverse mortgage for a lovely woman that was 103 years old.
What? What?
Yes,
Oh,
in-home health care. Yes. But as far as the term goes, we don't really call it a term. Um, by simple fact, there's no amortization attached to our
I see.
mortgages, obviously. So, you know, our mortgage is not due and payable until such time the client no longer occupies the property as their principal residence, whatever that looks like. So if they decide to right size, if they pass away, or if they are moving to a retirement or long-term care facility. So there's no length of time where we would call the mortgage. Mhm.
Can a homeowner be forced to sell their home if they have a reverse mortgage?
No, I mean, what we look at is, again, like any other traditional bank, is we are looking for homeowners to make sure that their property taxes are paid to date, that they have valid and enforceable home insurance, and that their condo fees, if it's a condominium, are paid and current. So as long as they maintain that, then no, we will not force them from their home.
Yeah, I did a lot of reading on that because I did have a comment on one of the folks that follows me on one of my channels about something like that. It's like, yeah, but what about this? That the fine print about this, and then specifically about maintaining the property. Well, who
Mhm.
who actually controls that, and who looks at that, and what does that actually mean? And so, what I thought I would do is, like, the news picks up on everything. Like, there's news article on everything. So I thought I'd Google homeowner kicked out of their home with a reverse mortgage. You
Mhm.
know what? I couldn't find one article.
No,
Not one.
no.
But I could find somebody who got their home stolen and so by
Yes,
selling their house, but I couldn't find that.
unfortunately.
And
Yeah,
that just goes to show you that you, just like any other bank, you don't want to sell their house. You don't want to own the house ever. You don't want to be on title. You want to work with the clients, and that's what I've heard and read is that you will work with the clients. If a client does miss a payment on their property tax and it's not up to date, you'll work with them to do that. If the home is needs repair, like let's face it, if you've got a leaky roof and it's ruining the house, and it's all of a sudden that value of the home's going to be gone, you got to fix the roof, and you would work
absolutely.
with the client to either add it to the reverse mortgage or figure out a way to get that roof fixed. Did I get that right?
Absolutely. You did. We have an amazing client relations department and portfolio management department that always are willing to work with clients. So we'll do our very best to make sure that they stay current and help them along the way. But you're absolutely right. We're not in the business. We're in the business of allowing people to stay in their home as long as possible, not removing them.
And so, what happens? We've talked a lot about the house increasing in value, but what happens if the home decreases in value? Is there the person that's going to get the inheritance going to get a bill at the same time for whatever the value decreased?
No, so we have a no negative equity guarantee, which is very, very important. And it's important to not only our borrowers and your clients, but also to the heirs. So we do have a no negative equity guarantee. So what that means is if there is more owing on the home than the home is worth, as long as we confirm that it's sold at fair market value and there is still a loss, we would never go after the estate for the difference.
Are there any tax implications to a reverse mortgage?
No. So all the funds are tax free. So it doesn't affect OAS or CPP. Um, the funds are completely tax free. The only thing that I would not be not be concerned about, but I would look into is if we have an individual who's on the Ontario Disability Pension Plan
Hmm.
that they confirm that if they were to obtain a reverse mortgage, what's the criteria around that?
On to the next question. So when I do a like a refinance, a lot of the lenders that I work with, they're asked the questions of what's the money going to be used for, right?
Hmm.
And in some cases, they want very specific details in order to do the refinance to get the funds. When it comes to a reverse mortgage, are there any restrictions on how I can use the funds?
There's no restrictions, as I always say, as long as it's legal. I mean, we no, I mean, like every other lender, we would ask or would want you to, articulate in the notes. I mean, usually it's quite evident we're paying out secured debt, we're paying out unsecured debt, a combination of the two, renovations, what have you. So, yeah, a little note doesn't hurt.
Right. So I can use it for golf. I can use it
You
to
got
fix
it.
my house and make it more accessible, putting in ramps, that sort of thing. Maybe I want to put in a tiki bar. Who knows what I want to put
Yeah.
in the pool, right?
Yeah,
So
it would
bring
be
in the
under
sand for a
renovations.
beach.
Yeah.
There
Yeah,
you go.
or like a lot of Canadians, a lot what we're seeing is, they're replenishing their savings. They've
Interesting.
depleted tax-free savings accounts. Um, you know, you can't eat a brick, as someone once said. So you need to have some liquidity. So maybe it's replenishing a tax-free savings account, or there's a good investment opportunity.
Mhm.
Maybe it's buying a secondary property. So yeah.
Okay, and so you touched on this a little bit in the beginning when we first started talking about this, but let's say both people on title pass away, and
Hmm.
now the loan needs to be repaid. Could you just kind of walk me through what the options are there on how to repay the loan at that point?
Yeah, absolutely. It's quite simple. So let's, if I may, Dwayne, I'm just going to talk about in a borrower situation because
Sure.
I get asked this question all the time. So in a husband and wife scenario, if one of them pass away, nothing changes. So the spouse can remain in the home. It's when the last of the the titled occupants and borrowers remains in the property. So when that person leaves the home, what would happen is, again, like any other traditional mortgage, it would probably be the heirs would probably hand it over to a lawyer, and a lawyer would order a discharge statement. The amount owing, principal and any accrued interest, would be paid from the sale, and the remainder goes to the heirs. Again, we don't get involved in that aspect of it. But what we do ask is that when the last of the borrowers is no longer in the property, there's 6 months for us to be repaid. If someone is the last of the borrower is moving into that's if they pass away. If they are going into a long-term care facility, they have up to a year to pay us out.
Oh, okay.
And again, yeah. So, and again, we're very we're very open to extending those dates if they can't be met.
Okay, on to our next question, Deanna. So this one I like, only because I have a lot of lawyers that I work with, and this is a topic we discuss quite a bit. And that is, unlike traditional mortgages, reverse mortgage, one of the requirements is having independent legal advice. I'd love to get your take on it.
Right, absolutely. And I think I think it's so important. Given the demographic that we're dealing with reverse mortgages, number one. And number two, it's really, although it's a mortgage, it differs from a traditional mortgage. So although, the client's gone through and had the discussion with their mortgage professional. They've applied for the mortgage. The mortgage broker, such as yourself, has gone through the disclosure document explaining anything or answering any questions. We feel it's really, really important for clients to have advice independent of HomeEquity Bank and a broker. So you've done everything that you should be doing, but we really think it's important to make sure that the clients really, really understand what the reverse mortgage is and how it may differ and what it might look like. So I think again, it's very important. It can't be waived. Even though we have clients that ask, well, I know my mortgage broker explained everything and the documents are clear. I'm sorry, we really feel that this is in your best interest. So you do have to obtain independent legal advice. And it's just that it's a lawyer that of the client's choosing that would give them the advice. So again, sort of separate from yourself and HomeEquity Bank. And really, what it is our legal department, once a mortgage is approved, our legal department would send your client's solicitor or lawyer all of the documents that need to be reviewed. The lawyer would contact the client, set up a signing appointment, go over all the documents, even though they may have already seen the documents or have received the same information that you've provided, and then the lawyer makes sure they sign, and then send back to our legal department, and then we send it for funding. So it really, really is a great, not even second, probably maybe even third set of eyes to make sure that the client really understands what they're getting into as far as a reverse mortgage and how it may differ.
That's so true.
And highlighting the benefits too, because it is different.
Absolutely. Like, even when I'm talking with first time home buyers, I always talk about having a dream team, right? You always want to have a dream team of licensed professionals in your corner. You want to have a financial advisor, you want to have an accountant, right? You want to have a lawyer, your real estate agent, your mortgage agent. And it's important because we all are educated and we have our lanes that we stay in, right? So I always
Yeah,
say in the content that I produce, I always talk about when it comes down to reverse mortgages, there's a number of people that you're going to want to talk to. Of course, your lawyer is one of them, but also your accountant, also your financial advisor, especially any family member that's going to be impacted
absolutely.
by this, and of course a mortgage agent. And just get the facts, like just understand, weigh it out. Here's the benefits on one side, here's the cons on the other side, and just completely understand that. And I think that's really what, your independent legal advice is going to do. Your lawyer is going to have your back, right?
Absolutely.
They're not working for the lender, they're working for you. And that's the
Yep.
same with the mortgage agent. Although I love getting a fee that you pay us for referring, but I work for the client, right? It's
Mhm.
always when I always want to make sure that I'm taking my client's best interest at heart, right? So
Absolutely. And suitability has never been more important, I think, more so than now. So maybe a reverse mortgage for one of your clients today, Dwayne, isn't the best solution. But you know what? Maybe 3 or 4 or 5 years from now, maybe it will be. So it's at a point in time, and they look to you for
mm,
your advice and guidance as their mortgage professional for sure.
absolutely, and we'll talk after we get through the next question. I actually have a couple scenarios I wanted to chat with you about.
Mhm.
But the last question I have from my viewers was, are there any government programs or benefits available to seniors with a reverse mortgage?
So with a reverse mortgage, so we are endorsed by CARP, the Canadian Association for Retired Persons, and the Legion. Now we do the government itself has a couple of programs that assist older Canadians to perhaps, to your point, you need it maybe a new roof. So they do have some sort of renovation programs that can assist.
Hmm.
And I think that program, in conjunction with a reverse mortgage, are brilliant. So although they're a little bit they're separate in a sense, but together it really allows individuals to live in their home, have it retrofit as they get older. Maybe there are things that can't be paid for that with chip reverse mortgage proceeds we can sort of help with that. So as we age, really it's retrofitting a home to meet that. But for other renovations, there are definite programs available through the government for our seniors.
Okay, perfect. Well, that brings me to the end of the questions. And again, I appreciate so much you being on the call today, and answering all these questions for the viewers. I was
No
wondering if we
worries.
could take a few minutes and talk about, different situations on where it might be a really good fit, and maybe talk about a situation where it wouldn't be a good fit for somebody to get a reverse mortgage
Okay, perfect. Well,
without
where it
naming
wouldn't
names,
fit
of
is,
course, right?
of course. So, of course, so where it wouldn't fit is anybody under the age of 55.
Okay.
So, just by, so that's it. That's an easy one. But really, so where it would fit, it's again looking at the demographic, someone who's preparing for retirement, someone who is in retirement, who wants to not necessarily, take the tax hit when drawing from their assets because they're drawing a little bit more, allowing them to stay and grow. So in combination, a reverse mortgage being a tax-free solution is great. And when we look at instances, I mean, we have individuals that are self-employed. So people that are still working can
Mhm.
still qualify and apply and qualify for a reverse mortgage. So, business for self is a good example. You know, our criteria as far as what we look at, again, similar but not similar in certain situations to a Schedule One bank. Um, but we're looking, can they cover the property taxes, can they pay their home insurance, condo fees and that type of thing. So again, we still do reverse mortgages for working Canadians. Situations where, again, paying up the mortgage, that lovely 103-year-old woman who was using the reverse mortgage for in-home health care because she's bound and determined to stay home, and her family wants her to be able to live in the home until she passes. So they're doing everything necessary to make that happen. One thing that in-home healthcare was a big one, especially during COVID.
Okay.
You know, no one wanted to put their loved one into a retirement home or long-term care facility at that time. In actual fact, we had people coming to us because they were taking their family member out of those facilities. So they needed help to care for them at home. So that sort of has, although, we're not in that situation anymore, that has sort of continued. In-home healthcare is a big one. Purchasing a vacation home or secondary residence was another big one and still
Really?
continues to be one. Absolutely. Yep.
So
I had a,
how would that work? So okay, I own my own
yeah.
home,
Yep.
and maybe I had a place in down south, and
Hmm.
realizing really quickly that my kids won't come down and see me down there,
Yeah.
and I want to be closer, and maybe buying a cottage somewhere in Bob Cajun in the Kawarthas or something like that might make sense. Even in Norfolk County, is some really nice places on Lake
Yeah.
Erie. So I can use a reverse mortgage to purchase a cottage.
Absolutely.
Hmm.
And you can even use a reverse mortgage to purchase a principal residence. So we will do reverse mortgages as even a purchase to right size when someone's looking at a new principal residence. We do purchases.
Okay.
So
How would that
yeah.
work? Walk me through that. Walk me through how would that work?
So I know it sounds like it could be difficult, but it's really not. So Dwayne, when we speak about your clients and we look at what they qualify for, when we use the calculator and the financial illustration, we do it on the property that they're living in now.
Right.
All we would do is we would look at the property they're looking to buy, and when we would apply the same methodology. So it will be calculated on
Oh,
on the
got it.
purchase price and the location. So let's say, and then so they're selling, let's say they're selling their existing residence.
Mhm.
We do the quote on what the new purchase would be and what they qualify for. Then they have to bridge the gap between for the down payment from the sale to the purchase. So they feel like they're walking away with a little bit of money in their pocket because right sizing isn't what it used to be, where you sell and you put $300,000 in your pocket and life is good. I mean, we're just not there. So,
And you actually
yeah,
have a product for bridging the gap. This is a relatively new product that you have, right? It's
it's
called the Chip Open or something like that.
it's called a chip open. So you're right. So that's our newest product, and that is absolutely to your point. It's for those situations whereby someone is looking to right size. They may be building their dream home,
Mm.
their dream forever home. Um, they need some of the equity to complete the build. So they can access some of those funds and complete the build and then pay it out when the property sells.
And there's no
So,
penalty like a
and
regular
there's no
mortgage, right?
penalty in a regular mortgage. No,
Mm.
no. So you avoid all those penalties. So in the right situation, it's a great product.
Now, have you ever heard of any stories where, clients, self-employed business owners have turned to a reverse mortgage and used a reverse mortgage as opposed to maybe borrowing money from the manufacturer on financing terms or anything like this? Do business owners ever do that?
Absolutely. Absolutely. Can use it for whatever reason they want. So it's if it's to inject into their small business or to start a small business, absolutely. Yep.
Interesting. Okay. So you're basically in that situation there. I've got a home. It's worth maybe 2 million bucks. I've been running a business successfully for many, many years, but in order to keep up, maybe I have to buy some manufacturing machinery or something like that. And instead of paying the high interest that the manufacturer is gonna charge me, I can use a reverse mortgage on my principal residence. In this case here, it's not impacting my cash flow of my business, right? So if I
You
had a
got it.
regular purchase financing terms, say it was a 2 year, I would have to make those monthly payments. And if cash flow was an
Mhm.
issue, then a reverse mortgage for me, for my business, might be a good product, right? That chip
Absolutely.
open
And
anyways.
yeah.
Yeah.
And again, it goes back to, using the funds for whatever is necessary, as long as it's legal.
Well, Deanna, it's been a blast. We've come to time now, and I just wanted to personally thank you so much for spending time with me today. I learned so much, as I always do, speaking with you, and
Thank you.
hopefully our viewers do too. If there's anything that you wanted to say and leave in the minds of our viewers, what would that be?
I would say take the time to really understand what CHIP offers. There's a lot of preconceived notions out there. There's a lot of misconceptions and myths. Reach out to your professional, mortgage professional such as Dwayne, and have a conversation. It may not be what you heard. or it's not what you hear. It's not what's on Google. What we do see on occasion is, people say, "Oh, well, I saw this, so I looked it up," and well, yeah, but that's reverse mortgages in the States. So it's a very
So
different
true.
product, right? So that's why the education piece is so important. So really, it's know the facts and yeah, and at the end it may not be the right product at the right time, but it could be. So it's really just understand what chip has to offer.
That's amazing. Well, once again, thank you so much, and I appreciate this. And have a great
Thank
week.
you. You too. Thanks, Dwayne.
Bye.
Always a pleasure. Bye.